Hello, my name is Paul Jones and I'm the fund manager of the Boston Income Fund. The Boston Income Fund, or BIF, is reporting an official quarterly return of 2.17% for the June 2020 quarter, which is equivalent to an annualised return of 8.72%. Your investment committee is pleased to report that there has been no disruption to the operations and activities of the BIF linked to or caused by the current COVID-19 pandemic. The June 2020 quarterly return is in line with previous quarters, and in this period of historically low interest rates has again comfortably outperformed the targeted return benchmark that was set by the committee. Whilst the Reserve Bank of Australia, or RBA, maintained a hold position on official interest rates at 0.25% during the June quarter, the market-based 30-day bank bill swap rate, or BBSW30, has shown extraordinary volatility. The BBSW30 rate has historically floated slightly above the RBA official cash rate, as can be seen in the tables shown on the screen. For example, the March quarter BBSW30 mark of 0.35% against the official cash rate of 0.25% at the time. At the end of June 2020, BBSW30 was quoted at 0.9% or 9 basis points, 16 basis points lower than the official cash rate. The BBSW30 rate is the starting point for the generation of the BIF return, but as can be seen, the margin over BBSW30 has been maintained by BIF over the period. As a result, and as a result of further developments referred to below, Boston will meet the full June 2020 distributions as expected. Payments and allocations under distribution reinvestment plans will be made prior to the program payment date of 21 July 2020. Investors will be aware that there has been a wide range of commentary and prediction about the medium and long-term economic impacts of the COVID-19 pandemic and its influence on other financial markets. Indications from market economists, in combination with movements observed in the interest rate futures market, suggest the possibility of another rate cut to the official cash rate down to 0% at some time over the next 12 months is likely. Interest rate futures pricing suggests a 50% chance of that occurring, but by contrast, the RBA commentary suggests that a move to the zero cash rate will be resisted. That divergence of views reflects the uncertainty that we are all feeling during this period. BIF has demonstrated stability of operation and return during this period, and all indications are that that stability will continue. The stability and certainty of returns provided to investors by the BIF during these times such as these should be a comfort to our investors. Our confidence in that stability is reinforced by the actions of both the state and federal governments and the actions of Thinktank, the mortgage platform which BIF invests. There have been several interventions by the federal government which have served to support Australia's economic position, most of which has been well publicised and well known. Not so widely publicised are the activities of the federal government through the Australian Office of Financial Management, or AOFM, which has moved swiftly and decisively to ensure liquidity in credit markets in a variety of ways. Thinktank has been at the forefront of gaining access to liquidity support programs being instituted by AOFM, which, for our purposes, are calibrated to ensure continued lending and cash flow to lenders in an environment in which many borrowers are experiencing business disruptions and not of their own making. The activities of the AOFM are serving to insulate those borrowers in hardship by strategic investments into lending platforms. The BML Investment Committee can also confirm that it has assisted the AOFM in its introduction to Thinktank as a note holder of various classes in one of its existing Thinktank warehouses and via the secondary market as a note holder in 2 Thinktank securitisation trusts. This reinforces our view that BIF returns will be maintained into the future, unlike many equity investments where dividend payments have been deferred, reduced or abandoned over the recent months. It is worth noting that advertised rates for term deposits with Australian banks and non-bank financial institutions over the quarter fell, and the market average return is now 1.1%. The BIF remains committed to participating in the credit-approved warehouses and securitised trusts created, introduced and managed by Thinktank Group Pty Limited. BIF can confirm that at 30 June, Thinktank holds $1.64 billion in loans under management across 2,654 loan accounts. The weighted average loan-to-value ratio, or LVR, across the think tank portfolio is 64.1%. And loan arrears of greater than 30 days, as at 30 June 2020, total 11 loans, or 0.41% of the total loans under management. This data and the developing COVID hardship category forms the cornerstone of the current BMIL Investment Committee considerations. The newly introduced hardship category of loans is being proactively managed by think tank, and payment holidays and deferrals have been extended along with the rest of the industry, but are below those reported by its peers. And the rate of curing of those loans is far faster than was originally anticipated. The BMIL Investment Committee continues to receive constant and reliable communication from the think tank executive group as well as the credit team as we both continue to successfully navigate through the new pandemic-influenced market environment. This is considered a welcome and supportive arrangement by the BMIL Investment Committee. The Australian funds management industry, along with other participants in the wider Australian economy, continue to navigate through the changes created by COVID-19 pandemic. As stated in the March 2020 quarterly report, few could have predicted these rapid events that have occurred across global markets and communities in the past months, nor the duration over which many COVID-19 created concerns have persisted. Once again, as the fund manager of the BIF, I can confirm that all unit holders will receive the full 91 days of interest income for the June 2020 quarter, which will be duly distributed or allocated on or by the 21st of July 2020, in accordance with your respective distribution instructions. Your BMIL Investment Committee also remains confident that income distributions will continue to be met over the coming quarters. Our commitment to maintaining regular income payments without any significant volatility in unit value remains a cornerstone of our BMIL model. Whilst the impacts of COVID-19 are wide-ranging and evolving at this time, the BMIL Investment Committee has full confidence that our strategically selected investments, specifically that of think tank, will continue to provide regular and reliable income to BIF unit holders during a time where volatility in other markets is causing and looks likely to continue to cause anxiety among investors. BMIL still remains business as usual in this uncertain time. If you have any questions about this video report or your Boston Income Fund investment, please call me on 02 8920 8886. Thank you for watching another of our quarterly video presentations.